Good evening, ladies and gentlemen. Today is April 7th, 2021. My name is Yvonne, and this is this week's Market Wrap-Up. U.S. trade deficit shows America's economics comeback. The higher U.S. trade deficit in February reflected exports of $187.3 billion on a seasonally adjusted basis, with 0.7% decline in imports, which tickled down from January record high of $260.1 billion. While trade deficits normally signal the lack of domestic manufacturing, it shows different picture under the pandemic. US seems in the lead of the pandemic recovery with more ability to purchase goods amongst others, including many European countries which are still facing lockdowns. The Fed decision to stop allowing banks to exclude treasuries from their supplementary leverage ratios has affected as of April 1st, however, has little influence on bank yield. In fact, the yield dropped below 1.7% to start the month of April. Central bank's commitment to accommodative policy in order to support a full economic recovery lead the SP 500 slightly higher, while Fed Chairman Powell has said the central bank will let inflation run hotter if it helps achieve full employment. European PMI indexes increases is backed by the recovery confidence. Inflation in the 19 countries of the Eurozone quickened in March to 1.7% from 0.9% in February on a higher energy and non-processed food prices, according to an official flash estimate. The European Central Bank has said there would be a temporary spike in inflation, which will then slow to well below the 2% target in the years ahead. In UK, IHS Markit's Purchase Managers Index climbed to 56.3 in March. Firms recorded their strongest optimism in more than 14 years and resumed hiring for the first time since the pandemic reached the UK 1 year ago. Spain's manufacturing PMI rose from 52.9 to 56.9, its highest level since December 2006, with Italy's PMI increases from 56.9 to 59.8. The March jump in Italy signaled the steepest improvement in manufacturing conditions for 21 years. GM's closed deals to remove its pension obligations at once. General Motors Canada has closed a deal for three insurance companies to take on $1.8 billion of its retiree pension obligations, removing from GM's books the risk of making the future payouts and made the largest transaction of its kind in this country's history. As the market chaos caused by COVID-19, deals like this are favorable under the condition of all-time high stock prices and potential rising interest rates. Now let's see what happened with the market today. The North American market saw upward movement this week. The SP 500 made news last Thursday for crossing the 4,000 threshold for the first time, and the tech-savvy Nasdaq Composite Index led the advance by semiconductor and hardware stocks gains. The TSX and SP 500 indexes all seeing upward trend around 2 to 3%, while Nasdaq seeing strong gain of up around 5% this week. The European market optimist outlook offset negative sentiment towards COVID-19 and the vaccine shortage across Europe. This was in spite of the World Health Organization putting the spotlight on Europe and its struggles to bring the pandemic under control. FTSE is up 2.5%, CAC 40 and DAX are up around 0.5%. Moving on to Asian markets, which are all seeing recovery in response to the North American market's strong gains. The ASX is up around 4%, the Hang Seng is down around 1.6%, and Nikkei is up around 2%. The Canadian currency is significantly weaker this week compared to other currencies, and the oil price seemed adjusted down for 2% after the Suez Canal back to order for a week. Gold is up for around 3.5% this week as the safe haven metal in investors' opinion. And copper, the base metal, is up around 2%. Although the market is still adjusting to new information, losses in gold and silver will likely be limited in the near term as both metals' near-term technical postures have improved recently. Thank you for listening to this week's market wrap-up. If you are interested for voluntary opportunity as the next news broadcaster, please contact the bridge. Thank you and have a good day.